Hello and welcome to another episode of Simplifying Financial Advice in the Financial Industry with me, Martin Kluter, CEO and founder of EndorseMe. Now, if you don't know what EndorseMe is, go check it out. It's a website for consumers and professionals to get connected so that you can actually see who you're dealing with, and it's a really good website, so go have a look at that. But look, today we're going to talk about the three types of financial advisors. Now you might be asking, I actually thought there's only one type of advisor, but there's three. So they are registered financial advisors, authorized financial advisors, and QFE advisors. Now all these three advisors actually play a really important part in New Zealand. So the reasons why is they basically give you the perfect financial advice situated to your needs, and they all have different ways of going about it. So let's delve a little bit deeper to see who they are. So first off, you've got the registered financial advisor, or RFA for short. Now RFAs basically are allowed to trade and give advice on insurance, mortgage, things like bank deposits, and those kind of products where they don't need a formal education as such required by the FMA, but they still give really good quality advice because they only focus on those industries. And if you're looking for someone to give you the best life insurance advice, then an RFA would probably be the best one to go to. Now, RFAs also belong to a governing body, most of them, which means they are actually regulated, and they also have a disclosure statement to say exactly who they are, how much they get paid for dealing with you, and also the kind of advice they're allowed to give you. Now they also get paid by the insurance companies or the mortgage companies like some banks, but they'll disclose that in their fee as well. And it depends on some advisors because they don't all do that. Some actually just require a fee up front, but most of them actually get commission paid. So that's registered financial advisors. So the next type of advisors are authorized financial advisors. So they basically need to be regulated by the FMA, which is the Financial Markets Authority. They need to have a formal education, which is a national certificate in financial services as a bare minimum, but they'll also have some sort of other qualification along with that. Now they have to adhere to a strict code of conduct, and they also have a strict code of ethics, which they need to adhere to give you the best advice that they can. Now they're allowed to actually give you advice on things like investments, bonds, KiwiSaver, all the investment products they can give advice on, as well as some of the insurance products if they chose to do that. Now they also have a disclosure statement to say exactly how much they get paid, and they also say exactly what kind of advice they can give and what they're not allowed to give advice on. With the AFAs, they also have a governing body, which they all belong to if they wish. So they're also heavily regulated like the RFAs, but also a little bit more with the FMA looking after them as well. AFAs might charge a fee for this service because it's an investment planning service, but most of them could get some sort of commission as well from the companies. But again, that'll be disclosed in the disclosure statement. So just ask them for that and make sure that they're fully qualified. So the next type of advisors would be QFE advisors, or Qualified Financial Entity Advisors. Now they work for an organization or a provider like a bank or some insurance companies, and the QFE is actually the bank or the insurance company or the provider they work for, and they have a license that is regulated by the FMA, Financial Markets Authority. They need to make sure that all their advisors adhere to those strict codes of conduct as well, and make sure that everybody is following the same advice process. The problem is that these companies only sell their products. So if you're looking for a mortgage, then the bank would be fine because all their lenders are allowed to actually provide advice on mortgages and some simple products as well, and even some life insurance products. The advantage of having a QFE is that most of them will have a very good knowledge of their products, and they'll be able to give you the best products of what they're allowed to sell you. The disadvantage is that they only have those products, which might be a good thing, but for someone that's looking for a more complex situation, an RFA or an AFA might be better. So now the question we get a lot is an AFA better than an RFA or a QFE? It's not that simple. In most cases, the AFA can actually give you advice on everything you need, but there are a lot of RFAs out there that decided not to become an AFA, but have the qualifications to become one if they choose to. The reasons why they don't is they like to focus on things like insurance or lending, and they don't want to have the investment side of their portfolio. So they just choose to be registered as a RFA, which means it's easier for them to trade. They can just give the advice that they actually have trained for, but they can also give you the best quality advice because they specialized in those areas. So someone that's been an RFA for a while might have done the National Certificate in Financial Services and decided to specialize in the in the insurance arm or the lending arm, which means they're fully qualified. QFEs, on the other hand, as I said before, only have their products that they can work with. So they're specialists in those products, but not necessarily a wide range of other products that you might be looking for. If you have a complex situation, again, be sure to check whether they're an AFA or RFA by looking at the FSP register, and you can always see if they're registered on the company's office. If they are not, got to ask some questions, but generally if they are trading, they should be registered, and make sure that they are. Don't be scared to ask them a few questions. Go out and actually just have a conversation with them and see if you can work with them, because it's your financial future that's sitting in their hands. So make sure it's the right person for you. If you don't know who you want to deal with, or you don't know who that person is, go to Endorse Me and have a look at their profile. There's videos on there, there's video testimonials. There's a lot of information there so that you can see if you want to deal with that person. If you have any questions, feel free to come back to us at Endorse Me. That's me, Martin Kluter. Until next time.